If you've got student loans, you feel the pressure of that financial obligation. But watch out. There are scammers looking to take advantage of your situation, offering student loan consolidation or elimination for a fee. Our guest today is Robert Farrington. Robert is founder of The College Investor. He has been featured in many media outlets such as the New York Times, Washington Post, ABC, and NBC News. As America's millennial money expert and America's student loan debt expert, he is on a mission to help people escape student loan debt and start building wealth for the future. I'm your host, Chris Parker, and this is the Easy Pray Podcast. Robert, thank you so much for coming on the Easy Pray Podcast today. Can you give our audience a little bit of background about how you became the millennial money expert and started thecollegeinvestor.com?
Yeah, definitely. Well, thanks for having me. I'm excited to be here. I started The College Investor over 10 years ago when I was finishing college, and I wanted to have it as a platform to share my thoughts on investing and money. I'd been side hustling and entrepreneurial since I was a teen, and I was taking that money and investing it. And after doing it for about a year and a half, I encountered a struggle with my own student loan debt and my own student loan servicer messing things up. And I wrote about it because what does any good blogger do, right? When you encounter a frustrating situation, you write a whole essay about it. And it was one of my first articles to go viral. And a lot of people were out there saying, oh my gosh, my student loan servicer is doing this too. And it's just a mess. And I started realizing that I need to dive into this subject more, look at student loans and how we can help people get out of it so that I could get to help people invest and build wealth and earn money. And so that's really where The College Investor is today, where we help people get out of student loan debt to start investing and building wealth as early as possible.
That's awesome. So we were talking about investing well or creating wealth and education. There's a little bit of a tug and pull there a little bit, or push and pull, in that college costs you money, and in some cases, 6 figures or more. And is your education really going to recoup the cost and be able to help you pay that off? I'm a big fan of Mike Rowe, and he is a big proponent of making sure that you can afford college, and that college is way too expensive, and college is not right. Necessarily a 4-year degree is not the track for everybody. Do you have any thoughts on that?
Yeah, I love Mike Rowe. Dirty jobs, right?
Yes.
College is great for a lot of people. I would say, and even the statistics show it, people that go to college as an average, right? So we're talking the average, make more money over the course of their lifetime than people that don't go to college. But once again, it's an average. It doesn't mean everybody. And it is expensive. And if you spend too much, just like any other investment, it might not be worth it. I like to have people remember that education is an investment. College is an investment. If you want to learn something, go on YouTube, right? You can learn anything in the world for free these days. And you're not going to college to learn it. You're going to college because it's a social signal to a future employer that you've done a thing. Whether the thing is worth it or not is relative on how much you spend on the thing, right? And so, if you go to college and only spend a little bit, maybe go to community college, go to a local state school, and you're in it for $10,000, $20,000, that's probably a good investment, right? But if you spend $80,000, $100,000 and all you wanted to do was be a teacher, that's not going to be a good investment, right? Because you can Google what a teacher salary is. You can know how much you're going to make. We're in a different age than we were even 20 years ago, where there's things like Glassdoor and these websites where you can type in salaries and see exactly what people make in the job you want to do. So the real thing is don't overpay for school. Now, there's also other options, right? Like you said, the dirty jobs, right? You can go into the trades. I love the trades. I think the problem is we don't expose a lot of young adults to the trades these days. And as a result, they don't necessarily know that they can make really good money, being a plumber and an electrician, right? Like, if you don't know this when you're in high school, you only know that, Elon Musk and technology and all these things. If that's all you know, that's what you suddenly start going down a path towards. But, if you see a lineman from your power company and you look and they're making $150K a year, maybe that's a path you actually want, but you just didn't know it existed. So yes, college isn't for everyone, but if you're going to go to college, you need to be smart about how much you borrow and spend on it.
Gotcha. And correct me if I'm wrong, there's generally 2 types of colleges. You have like state and locally state, county run educational institutions like your University of California, Irvine, or local community colleges that are kind of state and government run. And then you have for-profit, I guess it's probably three. Now I think about it. There's for-profit institutions where it is a company that their job is to make money for their shareholders, and the product that they're selling is an education, and they charge you for it. And then there's probably non-profit ones where they're not necessarily accountable to a shareholder.
Exactly. So you really do have three. You have the public schools, community colleges, state-run schools, like you said, UCLA, UC Berkeley, Michigan State, Penn State, all these state schools, right? Then you have the nonprofit universities. These are the Harvards of the world, right? Harvard, Cornell, that are, they have these prestigious names, but they're not necessarily run by the state. They're run by a board of directors, and they're a nonprofit. And then you have for-profit schools. University of Phoenix, probably one of the most well-known ones. A lot of these do online schooling today, or they do vocations, right? They're trying to get you technical training. Mm-hmm. A lot of these are also nursing schools, or, how to be a barber or beauty school or things like that, truck driving school. So they do target the trades a lot of times, but they also do a lot of online education. They also could be those online MBAs, night and weekend schools, things like that.
And I assume all the schools, whether they're public, they're private, they're nonprofit, they're for-profit, they're all going to have student loan programs, whether through them or partners.
Exactly. So there's also two big buckets of student loan types. You have federal student loans, and these are open to anyone. No credit qualifications or anything. You apply for the FAFSA, the free application for federal student aid, and you qualify for a government student loan. These are the direct student loans. And you have to have one requirement, though. Your school has to be accredited. So I will say that, all the state schools, all the, nonprofits like Harvard are accredited. Some for-profits are accredited. University of Phoenix, they're accredited, some of the bigger names. But some of the small vocational schools may not be accredited, so you can't access federal student loan money. On the flip side, there's private student loans, and these are student loans that come from banks, credit unions, and online lenders, and they act just like a car loan or a mortgage, where they check your credit. If you're approved, they will give you a student loan. And as a result, though, because they come from banks and private institutions, they don't have very many flexible programs. And those are a lot more aggressive when it comes to collecting, too. So something to be aware of.
So this leads us into the top of our discussion is the student loan scams. I'm sure there's let's talk through it. Like in my mind, I'm thinking of, it's just it's a fake loan, but also once you already have a loan and you're struggling to make payments, the scammer scoops in and says, hey, we can get your loan forgiven or reduce your payments. What are the student loan scams that you've seen?
Yeah, I mean, there's so many, and it becomes a game of whack-a-mole, but they all have a variation of a theme. And it's either I'm going to give you some kind of loan forgiveness, or I'm going to lower your monthly payment somehow. Right. And so these scams are targeting people that already have student loans. And I don't know about you, but I get these robocalls probably because I'm in the space. And I bet listeners have gotten robocalls about student loan scams, or they get flyers in the mail that say like Department of Education, you're approved for loan forgiveness. And if you see these things, it should just red light should be going off in your mind, because you know what? There are a lot of student loan forgiveness programs out there. Over 50% of all federal loan borrowers qualify for something.
Wow. But
I'll tell you what, they're all free. They're all run by the state and the federal government, and they have no fees to, charge you for it. So the biggest trend with every single student loan scam is you're going to pay a fee for some type of assistance, right? Like they're going to make you pay to lower your student loan payments. They're going to make you pay to get loan forgiveness. We're going to enroll you in a special program if you pay us 3 payments of $500 or some variation on that theme. That's what you have to really look for.
So are any of these programs legitimate where someone can refinance and reduce interest rates outside of those institutions that originally did the loans?
Yes, so these programs are totally legitimate, and that's what makes these things a scam. You're paying for something that you don't need to pay for. Basically, if you have a federal student loan forgiveness comes in a variety of forms. The most popular one is public service loan forgiveness. You might have heard this, right? You work in public service, nonprofit, or a teacher for 10 years, and you can get your loans totally, completely forgiven, tax-free. It's a federal program. It's amazing. It's the best student loan forgiveness program there is out there. But all it takes is filling out a form every year on the Department of Education's website called the Employment Certification Form, and you take it to your boss, and you have your boss sign off on it that, yes, I've worked as a teacher for the last 12 months or whatever period of time is, and you mail that to your loan servicer. Okay, that's all it takes. But these companies will charge you $1,200, $1,500, and they will fill out that form supposedly on your behalf. A lot of times what they're finding is they're faking the names and information on it. And that's why it's a scam, right? They're like, oh, we'll qualify you for this program. You now work at XYZ nonprofit. And they sign it and they mail it in for you, which now you have two issues, right? One, you paid a fee for this. And two, you sent false information to the Department of Education, which can lead to a lot of trouble for you if they find out. So you have to be very mindful of it. But yes, these programs are real. You can lower your payments. You can get loan forgiveness, but you don't need to pay a third party random company for that.
What about some of those consolidation kind of, are you pulling it out of like a federal program into a private entity, or are they actually able to, or is it a total scam?
Well, there's two different things. So there's loan consolidation, which is a free government program, which you consolidate all your federal loans into a single new loan. Now, most people do not need to consolidate their loans. In fact, most people should never consolidate their loans. The reason is when you consolidate your loans, you now take on a new loan to replace your old loans. Well, what happens is you just reset any forgiveness clock you had. And so if you had been paying your loans for 5 years and you consolidate, you just lost half of your time towards public service loan forgiveness. And you probably paid a company to do it for you that is not a fiduciary. They're not in your best interest. They're just trying to get a fee from you. And it might not have been the best thing. In fact, I see it more often be the worst thing for people. So most people shouldn't consolidate their loans. When it comes to lowering your payment, there's a lot of payment plan options for federal loans. Income-driven repayment plans, those payments can get to as low as zero if you don't make a lot of money, right? But again, it's a free program. If you call your lender directly and say, I can't afford my payments, I'd like to get on income-driven repayment, boom, they key it into the system and you're set for free. Again, you don't have to pay, but these companies, they snare you in because they know you're hurting. They know you're struggling with your loans and they're like, hey, I can lower your payments for you. And sometimes they lie. Sometimes they say you have 10 kids so that it makes it look like you can't afford your loans and things like that. And again, that can get you in trouble because at the end of the day, you're the one that's responsible for what information you send in.
That's scary that if someone else is filling out paperwork on your behalf and you're not paying attention, they're misrepresenting who you are and what's going on in your life, and you're on the hook for that. That's
100%. And that's the thing. The Cfpb and the FTC have been shutting these companies down. I would say they shut about 30 to 50 of these similar scams down every single year, but it's like whack-a-mole. And you see this all the time, right? They shut one down, another company starts up, I'm going to be student loan assistant LLC. And then they come up and we're going to be like student loan assistant help. They just add something else on and then they do the same thing. And it's painful.
Are there any other specific scams that you see going on with student loans?
Yeah. So one that's become popular lately is there's pseudo law firms involved in this. And what they try to advocate is that we can get your loans, discharged. We can get the company to do it, but you have to default on them. And then we'll negotiate on your behalf and get you to pay like 50% of what your loan is. Right. Well, what they don't tell you is to default on your student loan means you don't make payments for a year. Right. You trash your credit, all this stuff. But meanwhile, while you're not paying your student loans, you're paying this law firm, right? To protect you, quote unquote. And once you default, they try to negotiate on your behalf. They say, look, this borrower, hasn't made a payment in 12 months and they can't afford it. You should give them, 50% discount on their loans. Well, two aspects of that, right? One, the lender never has to agree to anything. Mm-hmm. And part two is by not paying your loan for a year or longer, your loan has now ballooned up maybe 25, 30% in late fees, accrued interest, penalties, things like that. So even if they come back to you and get you any type of settlement, it's only on the new high balance. So you've increased your loan by 30% to save a little bit, and you paid a law firm this whole time. You never usually come out ahead. The only people that come out ahead on this are these potential law firms and things like that.
Are there ones where those sort of things are legitimate if you are experiencing financial hardship, that there are programs that can help you with that, or like any of this stuff is a scam?
No, there's definitely tools that can help you for free when it comes to your student loan debt. The first thing is call your loan servicer. I know like the Sally Mays of the world, Navients, we hate them. Like it's fun to say these are horrible places. But on the flip side, they do have options for you for free. But you have to remember, you're just calling a center. And so if you don't necessarily tell the representative what you need or what you're looking for, they also can't necessarily guess what they should do for you. I think that's the frustration is, I call up, Navient or Nelnet, and I talk to a $12 an hour call center representative. They're not a financial advisor, but if you say, I want to get on this program, they will put you in that program. Thing is you need to look and Google it and do a little research on yourself so you know what to ask for. There's also a lot of cool apps these days that can help you with your student loan. So like Chipper app, things like that, where you can enter all your loans and they will help you navigate it for free. I will also say that there's paid places that are legitimate as well. But most of these are financial advisors, like legitimate CFPs. They're, licensed. They are fiduciaries to you. But you're getting more than student loan help there. These are going to be typically companies that will put together a financial plan for you that look at everything. They look at your budget, they look at your investments, and they look at your loans, and they help you figure out the best way to navigate everything in your financial life. But you're going to pay a fee because it's a real financial advisor, not just some fly-by-night, fill out a paperwork company.
And I assume anyone who's legitimate will be able to very clearly explain, here's what we do, here's how we do it.
Exactly.
Here's what your obligations are. Here's, the things that could go wrong, the things that could go right. Any legitimate company should be able to express all that stuff without you having to give them any money.
100%. And that's what a lot of these do is, they take your money and they say they're going to do something and they don't, or they take your money and they do something that maybe isn't the right thing to do for you because they just do it over and over again. But a real legitimate company is going to look at everything you got. They're going to give you a plan. You know what you're going to pay for. Most of these companies also won't ever do it for you, because they're not supposed to. Most of them will give you a plan that then you need to go execute and do yourself. But it's not that hard. It's not that scary. I know, like I said, Sally Mae, the idea of maybe calling them is a little fearful for a lot of student loan borrowers. You see the news, you're just like, I hate dealing with them. And it's true. But, doing it yourself will let you be informed. We'll make sure that you're getting the right things done. And if you hate calling people, I hate calling companies. I will never call companies. Send a secure email. Have that digital paperwork record that you reached out and you asked for something digitally. Send a certified letter. Like, you don't necessarily need to pick up the phone. Stuff gets lost in translation, but you can send them a certified letter. You can send a secure email via their online portals. And that also gives you a paperwork record should something ever go amiss. It's a lot easier to say, like, I requested this in writing, here's the proof, than it is I talked to a call center representative and he said, she said, things like that.
And I don't know when I called. I don't know what the date was. I don't know the name of the representative.
Exactly. And some of the crazy things that I've been seeing in the student loan space is some of the loan servicers, Congress is looking at requiring them all to retain the call logs because, believe it or not, 50% of the loan servicers don't retain the call logs longer than 90 days. Ooh. I wonder why that is, right? Some of them have been very diligent, have kept them for 7 years or so. But you might try to say, I called you a year ago, and they're like, I have no record of it. And they literally don't, because they, of course, put policies in place to purge their call logs because they don't want you to have that record either. So send a letter. It's a lot better.
Well, it's that they want to retain the call logs. And I'm being a little mocking here, so this is not necessarily like I have any inside information. But you have a lot of businesses that retain call recordings and call logs for a short period of time because they want to train and educate their staff. But they also don't want to retain them forever or 7 years, because if they get sued, for one, it's a hassle to maintain all these logs. But two, in case they get sued, they don't want to have to, here's the call that shows that, he did say this, we messed up. If there's no history of the call, then they are kind of a little bit washing their hands of the situation. So it's kind of unfortunate there.
It is. And I'll tell you, like, you know what, I like to rag on these loan servicers as much as the next person. They do things incorrectly. They do things wrong. But on the flip side, they're servicing 43 million people's loans. Most people have 3 to 5 different loans. So then, you know, you really actually have a portfolio of 150 million loans that you're trying to service, right? And so even if they're at 99.99% accurate with everything they do, you're still going to have tens of thousands of errors every single year. Yeah. And so, you know, I do sympathize, but on the flip side, I'm a big believer that you have to be 100% accountable for your own personal finances, because no one in this world is going to care for your money more than you do.
Yeah.
Right. And there's so many cool resources today. You can Google anything. You can find out more truth in about 30 seconds on Google than anything else. So, like, you know, if you're going to make a decision, like, at least put it in Google first, whatever the decision is.
Think it through. So are there other like red flags? So obviously if someone's wanting a fee up front, that should be a massive red flag. What are some other red flags that we should be watching out for?
Yeah, you should always be reviewing any paperwork that's done on your behalf. So I would say a year ago, the number one reason why the FTC and CFPB were shutting down loan companies is they were falsifying things. They were saying that you have 7 kids. They were saying that you work in public service and you don't work in public service. So, you know, you're not only going to pay this company, but you got to make sure the paperwork's done right. It's just like your tax return. You pay a CPA or an accountant or someone to do your taxes. At the end of the day, though, you're the one that has to sign on that bottom line and tell the IRS that this is accurate. Same is true when it comes to your student loan. So even if you pay a company or don't pay a company, which most people shouldn't pay a company, you've got to make sure it's accurate and check that records and keep a copy of the records. I'll tell you, a lot of these scams too, like they'll take those upfront fees and never do any work. But now you're here thinking, because you're getting email updates from this company, oh, we sent in your paperwork, but nothing's ever been sent in. Then you find out you're in default on your student loans because this company didn't do anything for you. And so you have to just be accountable to it on your own loans.
Is a little bit of that kind of trust but verify, when if you're working with a company to help you legitimately consolidate or something, that you're still going to the entities that hold the loans and saying, hey, I'm working with someone to consolidate. Have you received this paperwork? Have you got this?
Yeah, 100%. Because the hard part is submitting a thing like a consolidation or a changing your repayment plan application can take 30 to 60 days. Mm-hmm. That's how long it takes. And that's just the bureaucracy of our government, right? And so you have to go in and check. So even if you're going to work with somebody, you're going to work with a fiduciary, you need to log into your loan servicer's website still. Make sure you don't miss a payment, because, you know, if you put an application to change your repayment plan in, you're still responsible for any current payments due today until that goes through. And you guys know how billing cycles work, right? Like the bill could be due next week, but if they're not going to process your paperwork for 30 days, you might have to pay this current bill before your next bill gets changed. So you've got to stay on top of your loans, because the worst financial thing that can happen to you is going into default. It will be the most painful financial experience you've had. Even worse than, I think, being scammed, because at least a scam is a fixed cost typically. You know, you pay $700, nothing happens. But if you default on your student loans, you're looking at wage garnishments, you're looking at getting your tax refund taken, you're looking at, if you draw this out to retirement, Social Security, disability payments can get garnished. If you default on a private loan, they can sue you. Depending on your state, they could come after your assets, bank accounts, you know, your house even potentially in some states. Like, you can see a lot of financial pain by not paying your student loans.
So do the entities that, you know, the Sallie Mae's, do they reach out to their customers, the people who owe the money, and promote these loan programs? Or is the sort of thing, if anyone's promoting the program to you personally, you should be leery of the fact that it's being kind of like the IRS the IRS doesn't make phone calls. So if you're ever to call claiming to be from the IRS, it's not. Does that sort of thing happen with Sallie Mae, or do they actually promote their programs?
Sadly, they don't. So one of the things that Congress wants them to do is say like, hey, tell people they're eligible for these programs, but they will never call you. One, no government loan servicer will ever call you. They will send you letters. They will send you emails potentially, but the emails will all say log into your secure mailbox on their website. It will never have anything directly in it. And this is a hard part for a lot of young adults because chances are you took out your student loan your first year of college. And now fast forward 5-7 years, you don't live in the same place. You might have used like a school email address. You never updated your email address or anything like that. So like they're having a hard time contacting you. So one of the first things I advocate everyone do if they're struggling with their student loans is get organized. Find your loans, make sure all the contact information is correct. Make sure you have online access to all your loans so you can see them online, you can check them. You know that you're getting the emails or the statements every single month, because that's where a lot of people get into trouble before the scammers even try to prey on them is like, are you organized? Do you know what's due? Can they even contact you if there is an issue?
Keep your contact information up to date. Yeah, that's always one of the things that I thought about after I got out of college was these college email addresses are a problem because after you graduate, some like only let you keep it for so long, and then like you don't.
They turn it off after 12 months, and then all of a sudden, like emails just stop coming to you, right? And it's scary, especially if you have like a bank statement or a loan statement going to it.
Yeah, it becomes problematic. So what are there, if someone thinks they're being scammed, they're not sure if they're working with a legitimate entity or not, and regardless of whether they have or haven't paid a fee yet, what should they do if they think it might be a scam?
Yeah. So first off, you need to lock down your personal information. So typically these scammers are going to ask you for a lot of financial details, your name, your address, social security, where you work, things like that. If they ask for payment information, you're going to probably want to change your payment information. You might want to go monitor your credit if they took your, SSN and things like that to process your paperwork, and you want to alert your loan servicers. If you gave them an FSA ID, so the FSA is your financial aid ID, and it is used to log into things like FAFSA and studentaid.gov. And a lot of the scam companies will ask you for your FSA ID. So if they do, go and change it immediately. Don't give them access to it. It's actually a federal crime for them to use your FSA ID and log in on your behalf. And if any company is giving you any beef about refunding you fees you've paid, throw down. I'm going to be reporting you to the FTC, the CFPB, and my state attorney general because XYZ, you use my FSA ID, you're not legally allowed to. A couple of things will usually happen. One, they'll probably stop contacting you altogether. Two, most of them will refund you because they are very scared of that. And number three, I suggest you still report them when you get your money back because you need to help other people avoid these things.
So there's no reason any legitimate entity would be asking for a password, right?
Never ask for a password. They will never ask for your FSA ID. No legitimate company will ever log in on your behalf. It is a literal federal crime for someone else to log into the studentaid.gov portal using your information if they're not you.
Wow, that's crazy. So what are some of the craziest stories you've heard? I know that you've got forums on your website where people are talking about the scams that they've been a victim of. What are some of the scariest or most incredible scams that you've heard?
Yeah, the incredible scams are some of the dollar amounts. There was a company in Northern California that purported to be a reputable help company because they all purport to be reputable. And they were helping people through this. And they had taken over $43 million from people trying to get help at like $1,200 a pop, right? So you just do the math on the number of people they scammed. But they were trying to say things like, they weren't just paying for loan help because they would also charge like a $35 a month, monthly fee for us that they could reach out anytime and contact us with questions. So like a customer service fee, and they're just layering on fees to people. Well, the FTC comes, shuts this company down, and the founder tries to flee to South America with $2 million in a briefcase, and they arrest him at San Francisco International Airport with just cash full of it in his briefcase, trying to flee the country. And these are the people that, purport to quote unquote help you. And so you really need to do a little Google. You need to just sit down, ask yourself what's going on. I think the hardest ones are the people that, think that they're like, I'm paying for this. I know I don't need to pay for it, but I choose to because I don't want to devote any time to it. And like, you especially hear this with people that are, busy people, maybe they're business owners or they're doctors or lawyers, and they typically have a large amount of debt. But these companies like literally do nothing to them. And so like this person might already had $100,000 in debt, and the company's like, well, I'll consolidate and I'll do X, Y, Z. And they never do. They just keep taking the guy's money. And so now these loan balances just grow and grow and grow into astronomical amounts. And the people are like, well, it's being taken care of. And you see this too. A lot of people live in denial that they were scammed for a while until, things happen. And I see it today. I'll see a comment like, I use this company, and then I go to their website, it's a year later, and it says like the FTC has shut them down. I don't understand. Is my loan fixed? And even afterwards, it's like they still don't realize that like they were scammed and taken advantage of. So it's really challenging because when you're struggling with student loan debt, it just seems like the end of the world. It seems like, there's no way out. People know that student loans aren't getting discharged in bankruptcy typically. People know that there's not a lot of options. And, the risk of defaulting is that they're still going to come after you, right? Like you don't pay them, they're just going to garnish your wages and get paid anyways. So it's a very tough time emotionally and financially. And that's what these student loan companies are preying on. They're preying on that mindset. They're preying that, you'll do anything to get out of it. And that's what's so hard.
Yeah, that's absolutely crazy. So can you confirm for the listeners, because I was fortunate enough I was fortunate enough to work my butt off to go to school. But are like federal student loans, like you can't declare bankruptcy on them. You're on the hook for the rest of your life for them?
Yeah, I mean, there's a lot of options, but yes, they are typically not dischargeable in bankruptcy. It's not that they're not dischargeable in bankruptcy. They're just not for most people. The reason is to be discharged in bankruptcy, you have to prove that you'll never be able to repay your student loans. And the reason this is such a high bar is because there's those income-driven repayment plans we talked about.
Gotcha.
If you don't make a lot of money, a bankruptcy judge is going to be like, well, why don't you apply to this repayment plan that sets your payment at $0 a month? It's not that it needs to go to bankruptcy. It's just that you need to switch your payment plans. And if you truly are disabled or something happens, well, you can get your loans forgiven, what's called disability discharge. So for people that do become disabled and can't work, right, you get your loans discharged. And then there's a lot of loan forgiveness programs in between. And so that's why it's not that they can't be. It's just that it's a very hard bar to pass to get them forgiven or discharged bankruptcy. Gotcha.
There's so many programs to mitigate it. There's no, for the vast majority of people, there's no reason for them to be discharged through bankruptcy.
Exactly. It's just, it's hard because you tell someone, well, you're going to pay $5 a month on your loan. Well, your loan still grows. And I think that's the more emotionally hard part. It's like you're not going into default, but your loan still grows. But you also have to realize that those income-driven repayment plans also include loan forgiveness at the end. So they all have a fixed term. The fixed term is typically 20 years. So it's a long time. But at the 20th year, your loan is discharged. You're not going to pay any more on it anyway. So if life did not turn out like you wanted it to, and you really aren't going to be earning a lot of money, there's still relief. It's not amazing. It takes 20 years, but you limp it along at what you can afford, and then it goes away at 20 years.
So what's the largest student loan balance you've had discussions with a person about?
Well, there's definitely 7-figure loan balances. There's 100 Americans that have over $1 million in student loans. Wow. I've seen one of them personally. And, how they get there is it's graduate school. So when we were talking at the beginning of this episode about the ROI of college, I'll tell you that there's two people that benefit the most from student loan debt. The first that benefit the most are low income, low balance borrowers. These are people that, typically are going to make $30,000 to $50,000 a year, and they only borrow less than $10,000. Those people get a huge ROI on student loans because it's typically vocational school or something entry level, and they didn't borrow much. So it's great. The other one that does the most are people that borrow over $100,000 to $200,000 a year. Oh, well, what's that? Well, but here, what's that range? It's doctors, healthcare providers. So they get a huge ROI. So now if you're borrowing between $10,000 and $100,000, that's a negative ROI. And if you borrow but over $200,000, it's a negative ROI.
Just borrow more and your life will get better now.
But it's all what you do. Yeah. And so these people that borrow and go to the $1 million mark are all people that went to graduate school 100% of the time. And the reason is there's a special loan called a Grad Plus loan that sadly has no cap on what you can borrow.
Oh, gee. So are they paying for, like, is it where what you're seeing is that people are paying for living expenses through their student loan, and they have basically zero income while they're going to their master's program, yet they're living they're supporting a family off the loan, so to speak?
Yes. Well, they can borrow up to the cost of attendance at these schools. So there's not that there's no cap, but the cap is exceptionally high. That's the problem with everybody. I'll tell you, it's never tuition that screws anyone with their student loans. It's always the living expenses that screw everybody, because even at the most expensive school, tuition's like $20,000 a year. But how do you get to these 60, 70? It's because they're paying $40,000 for room and board. But these are typically schools that are like chiropractor school or orthodontist or anything. And these grad schools, because they know that there's no cap, unlike undergraduate borrowing, there's no cap. Well, I can suddenly set my cost of attendance here. So it's like, what came first, the chicken or the egg? Well, because the money's free, these grad schools set their costs so high that I'm going to charge, $50,000, $60,000 a year. And these students borrow $250,000 without even blinking.
Oh, that's crazy. So do you have resources on your website that can help people kind of navigate some of these things?
Yeah, so if you go to thecollegeinvestor.com, we have everything you can want to know about student loans, from getting in smart, figuring out how to borrow effectively, to navigating repayment, hopefully finding loan forgiveness, and of course, avoiding these scams so that you don't fall victim to it.
So before providing your social media, any parting advice for the listeners?
Yeah, so it always starts with getting organized. If you're feeling overwhelmed with your student loan debt, take 20 minutes and get organized. Figure out where your loans are, what you owe, who you owe it to, and figure it out. Write it down. I don't know. Everyone's got a different style. I'm a tech guy. I like apps. I like to keep my money in an app. But if that's not your style, maybe it's an Excel spreadsheet. Maybe it's a journal. Maybe it's just a good old 8x10 piece of paper and you just write it down. But figure out what you owe. And then that way you can make really better decisions on the next steps. But if you don't know where you're starting from, that's where you're going to get in trouble every time. Absolutely.
So how can people find out about you and The College Investor?
Yeah, so you can go to thecollegeinvestor.com. You can read anything there. If you love podcasts, like you probably do, we have the College Investor audio show. You can find us on your favorite podcasting platform.
Awesome. Robert, thank you so much for coming on and sharing about student loan scams today.
Hey, thanks for having me. This has been great.
Thank you. Thank you for listening to this episode of the Easy Pray podcast. If you like this episode, help support the podcast by leaving a review at easypray.com/review. Notes and a transcript of this episode with Robert Farrington can be found at easypray.com/47.